Hello, you're welcome to the Business Stories on Business Television Africa. My name is Emmanuel Abuajiri-Afe. Coming up in the headlines, government statistician continues to elaborate on Ghana's economic performance. First National, one of the fastest growing financial institutions in the country, has launched the Easter World Cup program. On the foreign front, Kenya's tourism industry has taken a hit from rise in cost of living and security concerns. The Statistical Service of Ghana on Wednesday released the Consumer Price Index, which once again showed an increase in inflation. The GDP, which was determined out of economic activities within the agric, industry and service sector, also saw the service sector recording the highest growth of 7.2% in the fourth quarter of 2013. Charles Aite has more.
The gross domestic product of Ghana for the fourth quarter of 2013 grew by 4.9% on a year-on-year basis, with the services recording 49.9%, agriculture 28.2%, and industry trailing behind by 25.9%.
Now we move on to the year-on-year growth for the fourth quarter of 2013, and we are saying that is estimated at 4.9%. This means that compared to the fourth quarter of 2012, the growth in the value of goods and services produced in the fourth quarter of 2013 was 4.9%. So we have a table showing the quarterly GDP year-on-year growth rates for 2013. We are saying that in the first quarter of 2013, the provisional figure was 6.7%. Now we have a revised figure of 9.0%. In the second quarter, the provisional figure was 6.1%. We have a figure of 10.9%. And in the third quarter, the growth rate was 0.3%. Now we have a revised figure of 4.9%. And for the fourth quarter, the provisional figure is 4.9%. Now we look at the year-on-year sectoral performance in the fourth quarter of 2013. And we are saying that services sector recorded the highest growth of 7.2%, followed by agriculture with a growth rate of 3.4%, and industry recorded a decline of 1.6%.
The industry sector recorded a negative growth rate of negative 1.3% compared to the negative growth rate of negative 1.8% in the third quarter of 2013. Which was attributed to the rise in gold and manganese production. Economic activities within the agricultural sector show the crops and cocoa sap sector, as well as forestry and logging, recording a slow growth of negative 0.3% and negative 12.5% respectively.
We also look at the performance of the industry sector in the fourth quarter of 2013. And we are talking about the year-on-year performance. Here we are seeing that the activities that showed strong growth were electricity, 16.3%, construction, 5.3%, mining and quarrying, including crude oil production, 1.3%. However, the manufacturing and water subsectors contributed negative growth rates of 14.7% and 0.8% respectively to the sector. So for 2013, we are seeing that crops and cocoa has grew by 5.9%. Livestock grew by 5.0%. There was no change in the forestry and logging subsector, and fishing grew by 5.8%. Agriculture has consistently declined from 31.8% in 2009 to about 22% in 2013. For the industry sector, we've seen a consistent increase in its contribution to GDP. So from 19.0% in 2009 to 28.6% in 2013. For the services sector, we see quite a bit of fluctuation. So we had a figure of 49.2% in 2009, 51.1% in 2010, 49.1% in 2011, 48.4% in 2012, and 49.5% in 2013.
Despite figures from the World Bank showing Ghana's economy stands well above the West African 2013 average for sub-Saharan Africa, the current economic growth of 7.1% stands as a dent on the country's current fiscal instability after 5 years of sustained growth above 8%. BTA News, Charles Aite.
Ghana's present economic situation continues to deal a great blow to many people, especially traders and small-scale entrepreneurs. For some time now, inflation has persistently recorded an upward trend, moving away from single-digit to double figures. The March inflation figure of 14.5%, coupled with other inconsistencies being witnessed, present a further challenging situation to the country. BTA News' Prince Daniel Bentel sampled the views of a section of the public on the current situation and now reports.
The gross domestic product of Ghana for the fourth quarter of 2013 grew by 4.9% on the year-on-year basis, with the service sector recording 45.9%, agriculture 28.2%, and industry trailing behind by 25.9%. Unfortunately, as prices of commodities keep rising, salaries remain unchanged. On the consistent basis, public sector's workers continue to agitate over poor working conditions. Again, the unavailability of constant power supply and water, as well as increase in the cost of housing, have dealt a heavy blow to the public and affected the state of the economy. Most businesses in Ghana fall under the small and medium-scale enterprises category, who are suffering the impact of increased taxation and other business costs. BTA News finds out from a section of Ghanaians how they assess the economy currently. The economy is really bad. We now work in fear as we are sure not to make no significant earnings at the end of the day.
As for the economy is tough, everybody is complaining. Water has been increased, electricity has gone up, and now the fuel prices. So it's tough, and business is not moving. So we are finding it difficult as at now. Compared to the previous years, you see that things are getting worse out of hand.
The economy is really not favorable. Price of things keep rising. We are unable to pay our children's fees. We are working, but our salaries are so small that they can hardly do anything meaningful with it.
The Deputy General Secretary of the Ghana Road Transport Coordinating Council, Andrew Kwesi Kwachi, has described the arbitrary increase in the price of fares as illegal, as the various stakeholders in the transport sector have not yet agreed on any fixed increase in fares. He was reacting to spontaneous increase in fares across the city following the announcement of the recent fuel price hikes.
It's unfortunate that some of the transport operators are in a hurry to increase their fares. We have said all these things do not just come. We have to sit down, make our time, put all the calculations together before we can arrive at a significant increase. So the increases this morning is uncalled for. It is not authorized by either GPRTU, GRTCC, no. It is some of the union executives who have taken the laws into their own hands.
The board chairman of GOIL Ghana Limited, Professor William Asumening, has intimated that the company will continue to expand its distribution outlets across the country and beyond as it seeks dominance in the downstream sector of Ghana's petroleum industry. He interacted with BTA News after management of GOIL presented a dividend of 1.5 million Ghana cedis to the Ministry of Finance and Economic Planning.
According to the management of GOIL, the average of 13.9% increase in the revenue base of the company is mainly due to the rebranding and restructuring of its customer service and shareholding engagements. The board chairman of the Ghana Oil Company, Professor William Asumening, tells BTA News that GOIL has been on the edge of the competitive bulk distribution market in Ghana and has yielded positive returns over the decades.
When we looked at industry, we found that our customers stayed away from GOIL for a number of reasons, not excluding the appearance of our stations. So the board decided that we should change the face of GOIL. Our station should be given a new look, and perhaps the new look coupled with new attitudes will draw in more customers. You know, we are just a marketing company, so the more buyers we have, the greater the profit. So that's what we did. And since we rolled out our new look, we have seen tremendous increase in patronage. And we think that our 2013 operations would have yielded us more profit, and we even see greater profits in 2014.
Touching further on the downstream oil business sector, Professor Asumeni stated that GOIL has had to come to terms with the high-risk returns for its shareholders over the years.
Remaining as oil marketing company is not too risky, but certain aspects of the petroleum industry could be risky. For example, if you imported large quantities of finished goods, or even crude oil, and you imported when the price was $150 per barrel, and the price came down to $100 per barrel, you already have the crude that cost you $150. So if you purified it and sold, it's the expectation of everybody that you sell it according to the price of $100. That's a big risk. That's where you would have made heavy losses if you didn't take care. So there are risks. But as an oil marketing company, we just sit back and buy from the bulk distributors, and we sell according to the MPA price. Perhaps the only risk the only risk we face, if you went in for a batch of petroleum products, petrol, diesel, at a certain price, and you could not sell at a reasonable rate, and the price came down, you'll be forced to reduce the price, and what you bought at the higher price remains an albatross around your neck.
The board of Ghana Oil has been urged to strive hard to be strong, competitive and profitable in order to pay increased dividends to its shareholders, including government as the majority shareholder of the company. This, Professor Asumeni agrees to.
Reporting reaching us indicate that there are 80 of them, including us, 80 sharing the same market. Certainly, this heightens the competition. So, if 8 of us were sharing that market some time ago, even if we shared it equally, we'll command a certain percentage. But then, GOIL had been among the leading companies in Ghana. So I would say that times of old, we commanded not less than 20% of the market. But when you bring in another 80 OMCs, this heightens the competition. So our share has fallen. Indeed, it fell to about 12%. Last year, it went up to 13%, and we are aiming at 14%. And the only way we can increase the share is to increase the number of stations. Now, when it comes to profit, we our operations are now limited to providing services at service stations. But then oil marketing company can do several things. For example, it can go into the aviation industry by selling to the aircrafts that come to Ghana. We can enter into the mining industry by fueling the machines being used by the miners. We can enter the bunkering. We have identified all these areas, and we are doing an aggressive research, and we are likely to go into these. Of course, the competition is stiff. There were companies that were performing these, providing these services. So if, for example, we want to go into the mines, it means that we are going to replace a company that was providing that service. So we have to be competitive. Competitive in terms of efficiency and maybe quality of products and so on. So yes, he was encouraging us to become more efficient, and of course, the more profits we make, the greater will be the government's share.
There are plans for GOIL to expand its distribution base to cover other corners of the country. This, Professor Asumeni reveals, will only require management approval.
We have been set up to sell, which means we are downstream. Upstream means you are engaged in exploration, and midstream means that you're in a position to add value to the crude petroleum when it's mined and so on. Much as we would want to be involved in mining and large-scale distribution, we are not set up to do that. And to be able to do some of the things that you have in mind, we need permission from National Petroleum Authority. Even within the marketing field, we have what we call the oil marketing companies, and then the companies that store the bulk companies. We are OMCs, oil marketing company. I've forgotten the term for the other companies, but they have the license to import or buy large quantities and store and sell to the marketing companies like GOIL. If we want to come, we call them BDCs, bulk distribution companies. If we want to become a BDC, we need a special license from the NPA to do so. Maybe we would want to become a BDC one day so that we can bring in gas in large quantities and distribute to either the industries or the service stations to sell. At the moment, we don't have the mandate to do that.
GOIL is a downstream Ghanaian oil and gas company listed on the stock index of the Ghana Stock Exchange. Being the largest fuel retail network across Ghana, GOIL has a wide customer base ranging from companies, institutions to major parastatals. Despite its entrenched status locally as well as some challenges faced, the company also remains one of the booming indigenous downstream oil and gas companies in West Africa. BTA News, Charles Aite.
First National, one of the fastest growing financial institutions in the country, has launched the Easter World Cup promo at its head office at Asylum Down, a suburb of Accra. As part of the promo, which ends after the World Cup tournament in July this year, the company will give away items branded in the bank's identity to both new and old clients. The CEO of First National, Patrick Anumil, launched the promo.
First National Financial Institution was incorporated in 1997 with a goal providing unparalleled excellence in service anytime, any place and anywhere. The bank has offered innovative financial products including employee loans, check and savings accounts, consumer and residential loan products. Since its inception, First National has made significant inroads in the financial sector. The company's Easter and World Cup promo is to give away goodies to its customers during Easter festivities, as Easter is synonymous with giving, and also to make customers happy during the World Cup season. The CEO of First National, Mr. Patrick Animel, noted that the Easter World Cup promo would also encourage customers to save with the bank.
Why the promo? The promo because we want to encourage our customers to save. And this month, because, as I said earlier, in the Christian world, Easter is a period of joy, and there's a lot of almsgiving and charity work done. So we also thought that we should get ourselves involved in this. So that's why we chose the Easter month. But I'll go ahead and add that we also know that the World Cup is coming in June. It's also another period of joy. So we fused the two together, and therefore we call it Easter World Cup Gift Promotion. 500, we open the account for you and we give you a gift. Subsequently, we'll give you the gift according as to how much you deposit. So for example, somebody who deposits, say, 200 and something will fall in the range of those who will qualify for a t-shirt. But if you get to about 500 or so, you qualify for a tote bag. If you get to about 1,000 or so, you qualify for a first digital decoder. So it depends on how much you put there. But whatever you put there, you will get a gift.
As the promo runs from the month of April to July, several gifts will be given away to customers. These include branded t-shirts, tote bags, and first digital boxes. To qualify for a gift, a customer needs to save a 100 Ghana cedi to win a t-shirt or a tote bag, and with a 1,000 Ghana cedi deposit, one can win a first digital box. Some new customers who opened accounts with the bank won gifts. They later shared their thoughts with BTA. Madam Barbara Annan expressed her appreciation to First National Bank for winning a first digital decoder for depositing a sum of 1,000 cedi in her account.
Minya decoder, baako, and I minya t-shirt, any bag baako. I'm the mom say, "Omunyina omuya omunim say, omunyina baba bui account to her because how bui account I was sika na enyira da." Nti mi de ofuturo mom say obi amia ne no fa ne sika betu First National.
You're welcome back. Moving away from Ghana, Kenya's tourism industry has taken a hit from rise in cost of living and security concerns. The cost of living, which had gone up over the past 1 year, and the tourism industry had not been spared from escalating costs. Some tourism operators say if unchecked, costs may rise to the extent that they make Kenya an unattractive tourist destination.
The tourism package found in Kenya stands tall when compared with other tourist destinations around the world. But that reputation is now under threat.
The destination is becoming very expensive. We are having security issues. We have the issue with poaching. And unless we address this, no matter how beautiful our destination is, overseas tour operators and overseas visitors will continue to find us a challenge to come to.
The beauty of the country's nature seems to have a magnetic pull on tourists.
I arrived at Friday and I must go back home at Monday, but I'm coming back in August, and believe me, then I stay much more longer in your beautiful country.
Enjoying what the country has to offer is coming at a steep cost to tourists, an issue which policymakers need to intervene sooner rather than later.
The park fees at $80 plus VAT, which makes it $90 against our competitors at $50 or $45 or $35. This makes it very, very expensive.
Besides visiting different parts of the country, a significant number of tourists want to give back to their host communities during their holiday.
We are here to open this school. You see behind me, we feel obliged. We feel that we do have a social responsibility in order to do something good for the destinations we are sending our customers, our clients to. And the school project is the key project we are having under this social responsibility, because we believe education is key.
The process of devolution is still encountering some teething problems, and the leeway for county governments to operate as they please may in certain instances spell tough times ahead for businesses.
There is a proposal that the county of Mombasa want to charge $6 per bed night and $500 per vehicle per annum. Now this is just a proposal, but if it were to go through, it will mean other counties will follow suit.
Tourism is one of Kenya's top foreign exchange earners.
And Ethiopia continues to enjoy rapid economic growth, outperforming most African countries. The capital, Addis Ababa, has become a huge construction site with vast numbers of new commercial buildings going up across the city. Experts say the boom is driving the country's strong economic performance and shows little sign of slowing down.
Addis Ababa is changing, and changing fast. The Ethiopian capital is in the midst of a massive construction boom. Private investors are jumping on the bandwagon, putting their money into new mixed-use buildings like this one. And the government too is investing billions of dollars in major projects like new roads, railways, and power lines to lay solid foundations for the country's economic development.
The basic engine blocks of economic transformation are the infrastructure. The Achilles heel of Africa, if you've seen, is power, lack of road networks, lack of the basic needs that you need to transform the economy.
Government's figures show Ethiopia's economy is growing at an annual rate of almost 10%, although the International Monetary Fund says it's closer to 7%. State-led incentives such as tax breaks and ready access to land are fueling the construction boom. With the financial services industry still in its infancy, private investors have few other places to put their money.
This is the most attractive investment opportunity in the country for the time being, since we do not have a financial market that is working properly.
Most of the new buildings are hotels, apartments and offices, the majority built by Ethiopian construction firms ploughing money back into the local community.
I hire a lot of workers here. I use a lot of local materials, I use a lot of subcontractors, and because of that all we grow together and the country benefit too actually.
The signs are that the country is benefiting. Ethiopia has created more than 4 million new jobs in the last 3 years, but more needs to be done to build a diverse and stable economy. Unemployment in cities dropped to 17.5% in 2012, according to the International Monetary Fund. With more people arriving every day from rural areas, the construction boom alone may not hold the answers for Ethiopia's straining economy.
And now to end our business stories, a look again at the headlines. Government statistician continues to elaborate on Ghana's economic performance. First National, one of the fastest growing financial institutions in the country, has launched the Easter World Cup program. On the foreign front, Kenya's tourism industry has taken a hit from rise in cost of living and security concerns. Thanks for watching. My name is Emmanuel Abwajiri Afi.